or maybe watching the recording. Well, let we do a quick intro round for people that don't know me yet. My name is Sander de Bruijin. I'm from Amsterdam in the Netherlands, and together with my friend, my dear friend Gordon, we took the initiative a couple of weeks ago to give back to the community. So we have invented this Crypto Wednesday, where we do a live show every Wednesday, same time, same place, same link, where we would like you to join and build up this crypto community where we would like to give back. We would like to give back information. We would like to give back insights. We want to present new developments in the market, just to, yeah, like I said, give back. And today we have some really special guests. But before we go to our guest, I would like to introduce my partner in crime. This is Mr. Gordon. He's well known as the crypto attorney from the crypto firm CryptoLaw Partners. And together with Gordon, we will be hosting these events, which are powered by Icoinic. But maybe before we introduce our guest, Gordon, I hand over to you quickly.
Sure, thank you so much. I appreciate it. Just real quick, Gordon Einstein. I'm an attorney. I practice crypto and blockchain law in Los Angeles, California. You can see the Los Angeles dawn behind me. It is 5:30 a.m. here. And as the show develops, the sky will get lighter and I will get darker, just by virtue of the light changing. Very happy to be doing this show. Again, I would like to thank Icoinic for putting it together, sponsoring it, just making it all happen. And Sander, I'm happy to be your partner in crime, though it sounds funny for an attorney to say that. And I'll pass it back to you.
I'm happy to work with an attorney as a partner in crime. That always sounds good. And I consider you as a friend, Gordon. So I had lots of fun the previous week, and we have some upcoming subjects in the upcoming weeks and months to go, which are really exciting. But today's subject is also interesting and fascinating. We have a lot of people that want to put this subject on the table. So today we're going to talk about decentralized finance. In other words, DeFi. And as most of you know, or maybe not know yet, it's a big market. What I've seen so far, 1.65 billion in DeFi now. And it grew really fast, because the figure that I saw on June 15, it was nearly around $1 billion. So it's almost, well, it's around 65% plus in just a small period of time. So something is happening. And during today's call, we're going to talk all about that. But before we do that, also, like Gordon mentioned, we would like to thank Icoinic Digital Asset Management from Amsterdam, where I also currently am active. I participate there as their Chief Investment Officer, and they are facilitating this webinar, so we're really grateful for that. And I think it's good to mention a little bit, before we hand over to these guys, to do a formal introduction to our two guest speakers today. We have Pavel and Tom. Let me start with Pavel. Pavel, first of all, thank you for being on the call and sharing some time with us. We really appreciate it. I know that you are the CEO of Distributed Lab. You have a PhD in cryptography. I hope I pronounced it right. And then we also have
cryptography.
Cryptography. Thank you.
But you know what? Your English is better than my Dutch. So okay.
Yeah. Well, we teach each other, right? As friends among each other. And then we also have Tom Howard on the call. Tom, you're a serial entrepreneur. You're currently launching Stealth project. And you're also the founder of DeFi Nation, which we will discuss during today's call. So I'm happy to have you on the call. I heard a lot of good news about you and the projects where you are involved in. And before we get started, maybe for our audience also, some little ground rules on how we would like to manage this call. So we have a Zoom call. We have opened the videos for ourselves as the host and the guest speakers. But for the participants, we prefer to keep the videos closed and also the microphones, so we have optimal sound system. But if there are like questions that you want to ask to us or our speakers, you're happy to do that. We can use the chat box, and we have our moderator, Luke, managing that, and he will bring the best questions forward so we can get that. It's an interactive session, so we applaud you being active and asking us questions. So thank you for understanding, and maybe this is a good time to pass to you, Gordon, so we can introduce our guest and we can get started.
Sure, thank you so much. So we'll start with, not in order of importance, but just in order of convenience. I'm going to start with Pavel, and then we'll go to Tom. So Pavel, just to set some context, name obviously Pavel Kravchenko. Tell us where you are in the world, because even with COVID, I'm never quite sure where you are. Tell us a little bit, and then tell us about Distributed Lab, and then we'll kind of go from there.
Okay, so I'm in Ukraine currently for the next 7 days. Yeah, I'm a cryptographer, and I was always interested in application of cryptography to real life, but until like Bitcoin, it wasn't really kind of too much widespread. So people were not really excited about that. And many things were lying at shelves as scientific papers, and that's it, and they were never used. And then blockchain industry came and all this explosion of projects, and now we cryptographers see that actual protocols are being tested, like in Zcash, in like Monero, and other things are really tested right now, and we are at the edge of this process. And I joined Stellar in 2014. Was there for a few months. Basically, after that, joined another startup in Singapore, and the same year co-founded Distributed Lab. Our goal was to like really understand what's going on, and we had the capacity, and we started doing some projects and doing R&D and education, and that's how it grew. So we're doing quite a lot of R&D. We wrote 5 books until now, hosted many conferences, earned quite a lot of money, like in projects, selling products that we've built, got in total 4 rounds of investment in 2 our companies. So like we've been in an exciting path, although we haven't participated in any ICO or STO or something like that. So we're doing pure business, like selling software and services. No mining, no investment, no. So we are focused more on enterprise applications. And enterprise, I don't mean just pure like how we boringly apply blockchain to the big corporation, but rather solving business problems. Like how do we do a decentralized registry of something that cannot be stored on a single computer, so consensus should be applied? Or how do we do the transaction real-time audit of all transactions? Or how do we do the like full transparency of things, provenance, and so on and so forth? So it's kind of quite interesting projects. And our team members were in Guatemala forests doing testing project applications there. It was kind of the thing to bring provenance to the like illegally cut wood. And I was in Madagascar talking to the local like tax and customs committee about blockchain. So I was like in many places, and I mean that's obviously some benefit about that very vibrant industry. But we are indeed very interested in this field. And our goal and our mission is to build financial internet. So all accounting systems will be able to talk to each other. Not through a single blockchain, we'll talk about this later, but rather like a mesh network. So independent systems speak the same language. And that's where we are moving towards that quite, I would say, slower than we want, because we're still in Ukraine, and who invests in Ukrainian startups? That's not too much. Yeah, you haven't. A little, okay, you did.
Well, I invest my time.
You
in
hosted.
I should mention I'm the chief legal officer of Distributed Lab, so I invest my time and effort. But
you invested a lot of time traveling to Ukraine and sharing your knowledge, so that was a huge contribution indeed. Yeah. So yeah, we try to spread. We try to distribute soon, so that would be another like a step. Regarding the DeFi, that's basically I have like a mixed feeling about this. But we'll share them later. But indeed, there will be a huge explosion of projects and ideas in this field. And we are involved in one project, which is also big in this space. And I'm also interested in economics. I read a few good books, and I read one of the first papers about stable coins, algorithmic stable coins, like base coin. Was quite impressed by the simplicity of it, like at least at the conceptual level. So it was kind of following some developments in this space. Sorry, it maybe took too long, but yeah.
No, it's great. We want to know the context so we can sort of lead into the larger conversations. So that's perfect. Tom, name, I think we got Tom Howard. Where are you now? Are you in Vietnam now?
I'm in my living room. No, yeah, I'm in
You're
Vietnam.
in your living room in Vietnam now.
Yep.
And by the way, when I visited Tom for his wedding, there's a lot of marriage connections on this call. It was beautiful. And then you described Vietnam as sort of a crypto capitalist or crypto anarcho capitalist heaven. So that always, I mean, the government kind of stuck with me.
Yeah, the government doesn't care too much about crypto, but they're the most capital anarcho system that I've ever been in, and they're a socialist government. So yeah, capitalism is alive and well in socialist Asia.
Yeah, well, I should visit because it died in the U.S. So I've obviously had the pleasure of working with you also, and you've always brought sort of a really kind of calm insight into things you just have an interesting way of expressing yourself. You obviously know what you're doing. You provide hard-hitting, objective feedback, but you do it in a way that is very palatable to people. And I think maybe rare. It's like you're a founder slash investor type with technical chops. I always found that interesting about you. So can you tell us about your background? Tell us how you got involved in blockchain and crypto in the first place, and then how did you come to decentralized finance or DeFi?
Yeah, sure. So let's see. I first discovered Bitcoin back in what was it, like 2011? Back in college, browsing
You're an
on Reddit.
OG, man.
Well, I just discovered it. I just found the magical internet money back then. I think I mined a little bit. I turned on the mining and it just ran it on my desktop, and it was like, oh, that's like 1 cent a day. Okay, delete. And then forgot about it for a while. Yep. Oops. And then, I think about 2 years later in 2013 is when I first kind of bought it on Coinbase. And then it just kind of sat around for a while. I was just like, yeah, I've got some Bitcoin in case, shit hits the fan and I need some cash, and, I've got some Bitcoin. And then 2017 happened, early 2017. I noticed that people were talking about Ethereum more, and I had seen the Ethereum project. I'd been kind of tracking it, but it seemed a bit like vaguely abstract, like big idea, like wasn't sure if anything would ever come of it. So 2017 comes around, and like things are happening. And so whatever I was doing at the time, I think it was like some sort of AngelList for Southeast Asia project. I was just like, drop everything, like, this is clearly the future.
Where were you at the time?
I was in Vietnam. Yeah. So I had, this was maybe a year or two after.
Okay, go ahead.
Yeah, it was like a year or two after I moved from San Francisco. So I was, tapped into the tech scene in Southeast Asia. Big growing scene, really on the upswing. So it was quite appealing. But then I saw, Ethereum had kind of figured some things out, and I just went headfirst into that. So I kind of got my start investing. I was building an investment platform, angel investing in Southeast Asia at the time. So I kind of pivoted that into angel investing in crypto projects and ICOs. So we actually turned that into an angel fund and invested pre-ICO in a bunch of different projects, at least 30 different projects, including some of the ones that are big in DeFi today, like Synthetics, Ren token, Kyber, and a couple of other ones. And yeah, after that market kind of ended, then I just went and started building. So started building DeFi tools, did a deep dive end of 2018. I really did the deep dive into DeFi. So that's when it started.
When you say building, are you, and sorry, I don't know this, are you a developer yourself? Are you putting together teams to execute on things? Can you play that out a little bit?
Yeah, I have a development background, so I studied computer science, but I don't code that often these days. I'm more like product management, like early design, and then kind of business growth, marketing, business models, all of that. So yeah, I kind of find the right people that are specialists to build really cool shit, and yeah, help put all the pieces together to make it turn it into a thing.
Interesting. So okay, you started to build these tools, you and your team, and when was that exactly? You pivoted and focused on DeFi?
Yeah, so that was end of 2018. So at the time, I was kind of disappointed with the failure of Bitcoin as electronic cash. It's a great store of value, but like it clearly has a lot of problems when it comes to actually transacting as a medium of exchange.
Yes.
On a regular basis. And so stablecoins became very interesting, and how to decentralize stablecoins. So that led into the MakerDAO rabbit hole. We built like kind of like a PayPal / Venmo for DAI, which is their stablecoin. So that's called Mosendo. And that kind of led into the whole finance rabbit hole behind that. So getting into synthetics and derivatives and lending and all of the different things that are going on. That was very interesting because I mean, the whole concept of programmable money seemed like the main primary use case of blockchain. And so, and I think that if we can't build something awesome with programmable money, how can we expect to tackle any other use case out there?
Right. I think you and Pavel share that interest. I always hear that Bitcoin or crypto is the separation of currency and state, and then and when you do that, the state role almost has to be taken over by networks and systems and algorithms because the state does there's a reason why they're bound. So you kind of have to substitute in those structures and those systems. But what I guess I love, and probably you guys do too, is you're not replacing one monolith with another. You're replacing a monolith with something that's potentially structurally better. It's attractive.
Yeah,
so
that's right.
So right now we talked a little bit before. Right now you've gone through a few DeFi projects, but right now you got a couple in the iron, but they're in stealth mode. Can you tease them out a little bit, or should we go stum on that and move on?
Well, let's see. So I can tell you a little bit about DeFi Nation.
Please, yeah.
A bit over a year ago.
Just real quick. I looked at your website. I looked at your Facebook group. I like it, and I'm actually stole one of your terms I'm going to use in the show. It's explain it to me like I'm 5.
Yes.
So on DeFi Nation they have the word of the day. Though sometimes it's a phrase, and I was reading through there. I'm like, good stuff. And the one that caught my eye that I'm gonna throw back at you is later on, explain to me like I'm 5, because that is fantastically powerful. So thank you. You just increased the repertoire. But go ahead, tell us about DeFi Nation.
Yeah, so just over a year ago, it was in New York at Consensus. So I had kind of discovered already a bunch of the known and existing DeFi projects. So like Dharma and Compound, and everybody was talking about those. But I went to New York, and I ran into so many early stage founders that were building really awesome stuff that nobody had ever heard of. And immediately I came back from that, and I was like, we have to start a DeFi community, get the founders in here, do interviews, explain this stuff to people so that they understand what's going on, because there's something magical happening. And I was convinced that like it was going to blow up in like 2 months. So here we are about 14 months later, and now it is starting to blow up. So right, but
blow up in a good way, like expand rapidly. When you say blow up, you mean
that's right. Yes,
expand, not.
Yes, it's one of those words with it means both itself and the opposite of what it means. So yeah.
Got it. Like you're so bad. Okay, got it.
Yeah. It's a great lawyer term. It's very non-ambiguous for lawyers,
Oh yeah, fantastic. Well, I'm always mindful that we have an international audience, and
yes, that's true.
I just want to make sure they get the nuance, because sometimes I don't get the nuance, and
Yep,
there you go.
That's
okay,
true. So yeah.
So DeFi Nation is rapidly expanding underneath your wise guidance. Go ahead.
And then I can hint a little bit. So I've been involved also with DAOs and the resurgence of DAOs. So I don't know if anyone has been following that, but there's there's
Not
DAO
only,
Stack,
not
there's
only
Aragon DAO.
sorry, our last show was about that.
Yeah.
Tim
Oh,
Lewis
nice.
and Wolf Cowell. We were talking about the
Oh,
developers
nice.
DAO, the Dev DAO. So that was our last show, and it's a 2-hour marathon. And I'm happy to be sort of lightly involved in that as well. It's yes,
Awesome.
we're going to town on DAOs. So this is actually
Awesome.
and I noticed also DAO is a defined term in your word of the day on DeFi Nation.
That's
so let's pause a second on that, because when we get into the nuts and bolts of DeFi, I want you specifically to address the intersection between DAOs and DeFi once we set sort of the DeFi context. But I'm glad you brought it up. So hopefully I didn't throw you off track there, but go ahead. So DeFi,
no, yeah, we can dig back into that later. But the point of that is kind of that. So I've been involved with DAOs. There's one that's called Meta Cartel, which gives grants to early stage projects building on the application layer. And that turned into another DAO called Meta Cartel Ventures. So this is basically a DAO that is a angel investment club. So that makes early stage investments into other projects, including other DAOs. And then there's another one that I'm involved in called the Raid Guild. And so the Raid Guild is a decentralized development agency that focuses on Web3, of course.
Raid,
so these are all
RAID or
RAID, yeah, raid. Like you're in World of Warcraft and you're forming a raid and you're going to get the raid boss. So that's when we have a project for Raid Guild, we call it a raid, and like that, winning the raid is like completing the project. And we have mages and like paladins and all of that. Like these are different roles within the Raid Guild. But yeah, the decentralized work aspect of that's super interesting. So through the Raid Guild, we collaborated with Synthetics, the Synthetics DAO, and we've just built a new feature on top of their decentralized exchange. So their decentralized exchange only has market orders, and so we've just built the limit order functionality on their exchange. So it's kind of a DAO to DAO business, if you will, where we've built this functionality for them. So that's undergoing audits right now. It'll be announced in the coming weeks.
I like this diversity of non-stealth things you can talk about.
Yes. So yeah. Anyways,
let me pause you because I want to give context to what you're saying. So to take your term, and I'm going to throw this to both of you, but I'm going to do Tom first. Decentralized finance, DeFi. Explain it to me like I'm 5. Go.
Okay. So first you have to understand what is finance. And so that's probably the harder part to explain. So finance is, what is finance? It's kind of the mathematics of money. So you have money and you can manipulate them in different ways mathematically. And so that turns into all these different, what's a 5-year-old word? I want to say words like derivatives, anyways, so if you have finance,
how about this? Finance, it's the math involved in allocating capital and making decisions about it.
Yep.
Is that fair to say?
That's right. So the way that
heavily
happens,
invested with the time value of money concept.
That's right. Yeah.
Okay, and then go ahead.
And so the way that happens right now is that you create these financial contracts, and they're managed by a centralized entity of some sort, right? So there, you have one counterparty and another. There's 2 people. They're the only ones that really know what's going on with the contract. And in order to enforce that contract, there's all these complicated processes to actually enforce it. So decentralized finance is taking these contracts and these transactions that happen in private and making them open and on the public blockchain, so that you can easily, if you've given someone a loan and you don't want to hold that loan position with them anymore, you can easily, since it's already tokenized, go and sell it on the DeFi market to somebody else who wants to hold on to that loan. So it makes the whole financial system much more transparent, and open.
And liquid, it sounds like.
And
From
yeah,
hearing you
and
correctly.
liquid, because it's less fragmented in these, exclusive silos.
And where
so
would you
that,
say where's the line? I think you kind of put out the line between legacy finance, let's call it, and DeFi. Where's the line between blockchain and cryptocurrencies as it exists separately from DeFi and DeFi? Like, when does one shade into the other?
I think once you get into financial contracts, then that's where one turns into another. So, you have crypto assets like Bitcoin or ETH, and that's just that's an asset of some sort, right?
Mm-hmm.
DeFi is taking one of those assets and applying some financial contract to that. So whether you're lending and earning interest, or creating futures or options or some kind of derivative, that's where you get into DeFi. So actually, when this was all starting, people were actually promoting two different terms.
Mm-hmm.
So DeFi was one of them. The other one was open finance.
Mm-hmm.
I'm a much bigger fan of the term open finance, because I think that's really the value and the goal of all of this, is that it's open. With decentralized attached to it, then people get a little bit emotional about what does decentralization mean. And then you have decentralization maximalists, and then you have minimalists, and it brings up a bunch of baggage. But it turns out that DeFi as a term is way more mimetic than open finance. So that's mimetic, what kind of won out.
And do you distinguish fintech and DeFi?
I say that DeFi is a subset of fintech. And if you're talking to fintech people, then DeFi is like the crazy uncle of fintech.
Okay, because one of my later questions was, is DeFi inherently not for legacy finance or for centralized finance? Or is it a potential new tool for legacy finance? And I know I posed that question, and I'm going to ask you to hold on the answer because we're still at the explain to me like on 5 part.
Okay.
Pavel, can you can you add to that and give you kind of your perspective? Like, explain DeFi like we're 5.
I would say DeFi is like Monopoly, but in electronic form. And when you start to play, you actually exchange real money to the virtual one. And then you just play the game and keep this money to pay to each other. And that's basically, which means that it's an agreement between people to follow certain rules and to accept each other payments, but then have the money which backs this virtual money. So that is DeFi.
And does DeFi make sense outside of the world of tethering it to actual assets, or is it always somehow a derivative layer?
Yes, it's like this watch means nothing to whatever 2 years old, right? But it means something for people like us. And you can say about many assets that are valuable in this world only for certain group. So they indeed, if it's traded, I mean, you cannot consume gold. You cannot. It's heavy. It's actually like quite cheap, and people still value gold and they accumulate it and so on and so forth. And like as soon as certain group of people start to exchange these assets and pay to each other, they acquire value. Like Bitcoin is the same. It's the first DeFi thing.
So go ahead.
What's different is just Bitcoin is just a simple it's like shells, right? In the ancient world, people collected shells and exchanged each other. And Monopoly as a game is a set of rules, a lot of rules. What to do in this case, in that case, in this case, in that case. And just the only difference between Monopoly and DeFi is that rules are executed automatically. So it's not that people sit next to each other and agree, right? The algorithms agree. And that's it. People just get what they have. So something like that. They still can do loans, they can deposits and buy something.
Got it. So to me, it sounds like sort of a port of the legacy financial system to these networks. Let me ask you, what does DeFi allow? So a port would imply a replication of pre-existing functionality, which we need. What does DeFi allow or enable that's beyond what's currently possible? Like what new opportunities open up as a result of DeFi?
Like with watches. Mechanical watch can only show time and some stupid functions. And then you have electronic watch, does the same function, but now it can do much more things, many more things. So, and it simplifies. You cannot build a mechanical watch like this size, but you indeed can build an electronic watch of this size. So you can simplify certain components of existing financial system and eliminating certain middlemen. Basically, that's kind of makes systems super cheap at the end compared to the original one, and super efficient and transparent. Again, this is the end goal, and this is one of the reasons why people are heavily investing in this without looking what they are investing in. But the idea will leave.
Well, I guess that leads to another question, which is for both of you. Tom, actually, go ahead. Say what you were about to say.
Yeah, so there's one thing that's really cool that's been introduced by a project called Aave, which is the concept of flash loans. And so flash loans gives anybody in the world the ability to borrow a lot of money, basically as much as in their lending pool, for the period of one block. And since when you create a transaction, it's actually a series of instructions. What you can do is at the beginning of that series of instructions say like, hey, I want to borrow $10 million in ETH. And then you can go trade that on some DEXs, perform some other options. And as long as you pay back that $10 million at the end of that transaction, the transaction will go through. And so you don't need to put up any collateral. You don't need any reputation for that because it's an atomic transaction, right? So that's super interesting because we've seen all of these like arbitrage and exploits that are enabled by flash loans where some hacker that doesn't necessarily have a ton of capital behind them, they don't have a hedge fund, they can use these flash loans and do this arbitrage, make a lot of money in a single block, in a single transaction, just by being able to borrow 10 million for a single block. So that is something that's completely impossible in the legacy finance system.
Now, is that an exploit or is that the way it's supposed to be used and they're using it right?
So it's been used for good and bad. It's a tool that's been used for both. So there's, there was one famous incident where some protocol didn't have, they had an exploit in their system. So a hacker used that to kind of like drain the system. But others have used it to basically get leverage on arbitrage opportunities that they spot. So they see like, oh, the price of something on this DEX is different from the price on this DEX. So I'm going to go borrow, 500,000 and arbitrage all of the existing arbitrage opportunity that I see available on those DEXs.
Which sounds like the intended use of that network. They're not doing anything wrong by doing that.
That's right. Yeah.
They're fulfilling its purpose.
That's right.
And one thing we'll talk about later on is the security challenges of distributed finance. Okay, so it sounds like if I'm trying to look at the value proposition of it, it sounds like it's the typical things that come when you digitize, or even of course legacy finance is to a certain extent digitized, but the benefits that come when you standardize, automate, build up consistent rules of interaction, things happen faster, they happen cheaper, which I think lets you push down lower into the stack, like loans and transactions which would not be economically feasible because of transaction costs and time under the legacy system suddenly become feasible and economically worthwhile because the efficiencies now allow it to make sense. If you're gonna make a penny per transaction, but you can do 1 billion transactions all of a sudden, that becomes interesting. And I like the idea that you can move fast, maybe or maybe not break things with DeFi in a way that you can't with legacy finance. Interesting.
Yeah,
so,
and it opens it up a lot more, right? So for instance, there's all these lending networks where you can earn interest on different assets, and a lot of times they're used for, say, shorting Bitcoin or ETH or something like that. Like those kind of lenders will pay a decent amount of money in interest. And typically that sort of interest gets captured by the big banks. And so they make all that money, right, in the traditional markets. So with DeFi, this opens it up where anybody can lend any amount of asset. If they want to put in $100, instead of putting it in their bank and earning a fraction of a percentage point of interest, and then that bank goes and lends it out for 20% and keeps the whole difference, they can go put it directly into a DeFi pool, earn 10 to 20% on one of these pools, and keep it all for themselves instead of the bank taking it.
So let me pause this thing. I see that I'm turning into a silhouette as Los Angeles gets brighter. So just give me one second here. Hold on one moment.
This is the nice part of having a community in different time zones. Huh? We have Vietnam, we have Amsterdam, the Netherlands, we have LA. And Pavel, helping.
I don't know if that made any. Oh, there you go. Here I am. I'm with you a little bit more.
Pavel, say again, please.
Yeah, I'm in Ukraine.
Oh, Ukraine. Yeah.
If you
Gordon, I just mentioned this is one of the nice subjects about having guest speakers and an audience from different continents. We are all over the world, right?
Yeah, but only I am up at 5:30 in the morning. Thank you very much.
Yeah.
So,
thanks for that.
Yeah. No. Thank you. Lovely. So I guess so. Let's. So does the inherent? Oh, here's Tom. You know what you just said makes me wonder is if the ability to engage in these micro fast transactions, in quote unquote investing $100 right then, that's sort of another nail in the coffin of the accredited investor definition, because it's accredited investors, of course, just for an international audience, it's a U.S. legal concept that certain non-public securities can only be invested in if the investor meets certain wealth or sophistication requirements. It's a way of protecting Main Street from those rogue investors from New York City. And it's a concept that's been around for a long time, but it also acts as a barrier to entry for people who are less well off to become more well off by engaging in intelligent investing and getting good return on their funds. The smaller investors historically has been stuck to investing in the public markets or creating their own investments by, say, starting a company. When you're talking about a flash transaction, do I want to put $100 towards this quickly? There's no time to do a proper offering prospectus, file a Form D with the SEC, see whether or not the person's accredited or not. It just, they probably need to do it in microseconds or algorithmically. So I think this might be another example of technology pushing law, bypassing law, or making the law irrelevant. I mean, I wouldn't want only accredited investors to be able to do this, because that kind of defeats the whole point of democratizing access.
Yeah, and I don't think any of these are securities. So we're talking about lending pools here. So the profits that the individual gains are not due to the efforts of others. There's no active managers. So they go to a lending protocol. They read about that protocol. They learn about it. They learn about the risks. They learn how it works, and they put their capital into the lending protocol. And so their capital is then lent out according to the rules of that protocol. So there's no manager in there once they send the money. It's working exactly as described, or at least it's supposed to, right? And the user kind of does that diligence on the protocol first. So I would say that the lending pools for the most part are not considered securities because there is no active management.
I think we could riff on that for a while. The included in the definition of security is bonds and notes and debentures. So you're prototypically in the known category. That's number one. But number two is it's not entirely clear whether you have an issuer in this case, or if you have or a common
exactly
enterprise,
right.
Because the issuer you don't quite. It'd be an interesting argument. I don't think it's a given under U.S. law that these aren't securities, and don't put your foot in your mouth. But I'm just saying from my
you're hitting on another point, which is it actually doesn't matter because there's nobody to go after. There's nobody responsible for this. So there is no issuer. yeah, it would be a difficult thing to even identify who to kind of go after for this. And that's another interesting point about the intersection of law and crypto. Regulation actually almost encourages full decentralization, because if you're fully decentralized, then the regulators actually can't do anything about a particular protocol. So it's kind of
anonymous,
a forcing
decentralized,
function to be...
yeah, perfect.
Yeah,
distributed. That's that's what I would like, but I keep on thinking about Ross Ulbricht and Silk Road, and when there's enough government motivation, they'll arrest you now, and you can fight it later.
So that if there was a person to take down, then it wasn't decentralized, was it?
Yeah, but we all have physical bodies. We all live somewhere. It's like Bitcoin's
no, I know, but he was like, there's nobody you can arrest that would stop Bitcoin from working, right?
No,
you arrest Ross Ulbricht, and the operations for the drug shipping empire stops working, right? So like, he wasn't arrested for his Bitcoin. He was arrested for shipping drugs all over the world.
Actually, he got arrested for contract for killing.
Well, yeah.
but the reason they found so
yeah,
I don't know if
he was arrested because it was not decentralized.
Yeah, he failed to do decentralized contract killing, and
that's right.
No, I don't know if he's the libertarian hero everyone thinks he is, but that's a very good argument for security, operational security, and several other things. But okay, so that's a interesting little tunnel we could go down. So returning to a prior question, is DeFi, it democratizes access, it lowers transaction costs. Is it inherently anti-legacy finance? Is it a new channel? Like, is it revolutionary? Is it going to be co-opted? Like, where's it going? And Pavel, I want you to jump in here also. I know you're doing a lot of work with, I think, Ukrainian regulatory institutions and the National Bank of Ukraine. You have a lot of institutional interface here. So where's...
Yeah, it's not really DeFi. Maybe they perceive it like DeFi, but it's not. It's more or less like update of an accounting infrastructure. Regarding DeFi, I think the biggest driver is the gray market that needs fast payments right now, and offers are like more or less suspended. So they need something. They use Tether a lot. They start using something else. They just don't have any other option to pay. So I think this is the main driver. So the gray economy is not going anywhere, and every country has it. And even the cannabis market in the US, everybody knows it's kind of allowed in certain states, but they cannot get the bank account because it's prohibited on the federal level. So that's collision. So the gray market is the driver of all of that. And basically, even if it sounds like strange, but we are educating these people all together, telling about these things and providing some credibility to all these projects, and they experiment with that. So the central banks, maybe my personal opinion is that the China, which is trying, at least on paper, to launch CBDC as fast as possible, has the goal to outperform the US dollar in certain future, because if everybody will be able to open an account in the Chinese CBDC, in a minute, just downloading the app and starting accepting the payments, Chinese may just say, okay, if you're outside China, we don't really care who you are, we don't care about capital control, just use it. And many people will use it, really a lot of people, because Chinese currency will be much more stable than their local currencies. And having troubles with paying with D, where you always
I think we're losing you a little bit. Your Wi-Fi.
Bank that you're not. This is the my Wi-Fi. said that now you have to convince the bank that you are not a criminal doing transactions. And if CBDC will turn this like around, that's saying that do everything, anything you want, unless we prove you are a criminal. That may actually explode. So I think there will be global competition for the CBDC market. Again, it's not really DeFi, as I believe, but it is one step towards that direction.
That's such an anti-communist thing, you know. Unless it's forbidden, it's allowed. That's definitely. It's funny, they're happy to do that outside of China, and it's an interesting way of looking at it, though. So let me throw this to both of you.
Yeah, but again, the only explanation for me is that why this may happen, because now they say, oh, it's blockchain or it's token, it's something different, it's innovation, we should allow it, and la 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 la. And even though it's the same thing, it's like currency, right? The currency is not changing its form if it's printed on paper or plastic or blockchain. But the laws started to like differentiate these two things and create a percent. For the blockchain, it's fine to have peer-to-peer payments or like just whatever, no AML or like that, or AML that's not compliant with some other laws. So it might be going that direction.
So if Libra is successful, let me throw this to both of you. If Libra is successful, both as a currency and the contracts layer that Facebook and the consortium say they want to build on top of it, does it eliminate the need for DeFi and all these other players?
No, definitely not.
Because
Gordon, just one question from me. Could you imagine, like 5 years ago, that there will be a bank which has total emission of $10 billion, that anybody could buy these dollars, send to each other, and it will be still $1, and you can exchange it in any city in the world, and nobody is doing anything about it. I mean, better. This looks crazy especially after will shut down. So like, why nobody is doing anything with this?
So, Pavel, I'm afraid you're cutting in and out a little bit with your wireless, but I think you mentioned, could anyone imagine Tether all these years ago and its broad functionality? But so Tom, sorry, just Pavel, we're losing a little bit, and we got Dennis joining us. Awesome. Tom, so you came out with a strong no about why Libra doesn't obviate the need for DeFi. Explain that.
Yeah, so as somebody who tends towards a venture investing mindset versus like a banking mindset, I'm looking for not what things are right now. I'm looking for what things will be in the future, right? Bankers tend to look at it and be like, oh, this is how things are right now, and like that's how we always expect it will be because that's how it is right now, right? So I look at what's happening now, and Pavel is totally right. Like gray market drives a lot of the economic activity in crypto and DeFi in general. But like for now, it's just a proving ground for the technologies that we're building. Where I see this going in the future, right now, DeFi all happens on Ethereum, like almost 100% on Ethereum. So DeFi and Ethereum are a bit synonymous at the moment, but what we're actually, the different primitives that we're developing, the different things we're figuring out in the decentralized finance space can apply to any other blockchains. So if Libra launches, I think that there's going to be DeFi on Libra. I think that CBDC will have DeFi on CBDC. That's the China blockchain. Or if the US government, the Fed, or the banking consortium launches their blockchain, they're going to have DeFi in those things. So it's the way I see it, like it's all happening on Ethereum right now. It's early days. Like we're at the stage in DeFi where like Steve Jobs and Steve Wozniak are like tinkering at like the homebrew computer club, and like they're like all these nerds like building their own PCs. That's kind of where we are right now. But you know, someday soon, Steve Jobs is going to figure out how to package this up for the rest of the world so that they can use it too. And who knows what will that happen next year or 10 years? I don't know. But I see the banks are going to be a part of this. This makes more sense. It's more efficient for them to participate in this in the long run. Right now, the volumes are too low. It doesn't make economic sense, but they'll use DeFi protocols in the future.
Now I think I understand your attraction to I think you called it open finance as a term.
Yes.
Because I guess my Libra question implied the potential incompatibility of the decentralized prefix with something like large scale and institutional. But when you when you merely call it open finance, it's a layer that anyone can use, including institutions, but not necessarily institutions.
That's right.
That's what you're saying.
And so decentralization is a gradient, you know, like the U.S. government is technically a decentralized system. There's, you know, there's some glitches that we're discovering right now in the decentralized system, but it's designed to be a decentralized system. The Visa network is a decentralized system. It's not like Visa can control like everything on the network. It's actually a consortium of many different entities that are members of Visa that decide the direction of Visa itself. So like Libra is another example where like, yes, there's a lot of different organizations that are running the nodes, but it is a somewhat decentralized in that there's hundreds of them that are making decisions, and it's meant to be open. And how open it will be, we'll find out. But yeah, it can do many things.
Fair enough. Now, why? Let's talk about the Ethereum part. Why did DeFi blossom on Ethereum, not on a different blockchain or on a new custom-built blockchain? How did that happen? And is it, one of the quotes I just read this morning was that DeFi is the quote-unquote killer dApp, not app, dApp for Ethereum. And I'm wondering, is that like an exclusive specific relationship? Is it just happened to happen? Or can you give us a little bit of the idea of how this rolled out? Why is
so there's a couple of advantages that Ethereum has. So one, liquidity begets liquidity. It doesn't matter where it is. Once something is the most liquid thing, then more liquidity gets added to it. And that's why Tether is so successful. It was the first USD stablecoin that got significant traction. That's why everyone uses it. If USDC had launched and that was the first thing, then everybody would be using USDC instead of Tether. So most of the liquidity for programmable financial contracts was already on Ethereum and will continue to be on Ethereum. So people will continue building on Ethereum. The other reason is that the developer ecosystem is much more advanced than in any other ecosystem because Ethereum's had a much longer head start. So there's a lot of tooling. We considered building products on like more scalable blockchains, and we'd actually have to spend like a whole another 2 years rebuilding infrastructure that already exists on Ethereum to build the same product. So obviously, for a startup, that doesn't make a lot of sense to have to do that. So yeah, it's got a lot of advantages right now.
So when
the other piece is composability. So you can, in DeFi, you can combine a bunch of different protocols together. So you can another protocol and like earn interest on that lending asset. And so that composability enables new functionality that you can't get if you're on a different chain.
Interesting, because I keep, I remember back when EOS and these other chains were launching, I think part of the complaint was Ethereum was sort of like your granddad's blockchain. They weren't keeping up. They were having trouble rolling things out. They were having trouble going to proof of stake, and they were having trouble processing the number of transactions per second per minute that would get to quote unquote Visa levels. But those other, because of maybe many factors, those other projects seems to have faded back and gone quiet, maybe a little bit because of SEC litigation, maybe not. But it's, do you find yourself at all constrained by the state of Ethereum, or was it mischaracterized?
I would say that most of the projects that raise money to compete against Ethereum were elaborate schemes to take money from suckers. So most of them are not that useful and actually haven't been able to ship anything that is really useful. especially when compared to Ethereum. EOS is one that's like a big one that it's actually worse than Ethereum in many ways.
Worse technically, or worse from a sort of management vision? Worse implementation, or worse primitives?
Technically, it's easily to DDoS EOS and just take the whole network down. So it's just completely useless from a technical perspective to build up.
Is that because of the nature of it, or because it just isn't so broadly adopted as Ethereum?
No, that's because of the nature of it, because it's technically flawed in the architecture. Because of the weaknesses of their consensus mechanism and the RAM system and a bunch of the implementation details, like it's just, there's no reason to use EOS. There's many other things that are better, including Ethereum itself. And then there's many scalability projects that are built on Ethereum. So we have state channels, we have ZK rollups. Maybe sharding will happen, maybe not. I actually don't think that sharding is necessary to scale Ethereum, because we do have a bunch of very good layer 2 solutions already. But yeah, Ethereum moves slowly because
you're breaking Vlad's Ampere heart. I think he was working on that intensely with Ethereum. Vlad. Okay, go ahead.
Decentralized. There's a couple of projects that have a small chance of kind of displacing Ethereum. I think like Near Protocol might be one of those. Near Protocol, if you don't know, is basically implemented the ETH2 spec. And they're like, hey, we're just going to do this as a separate blockchain, so we don't have the political overhead of upgrading. So they basically built ETH2 and launched their own blockchain with better developer experience. So they have a lot of the same tools, but they're going to have the liquidity problems, like all the liquidity is on Ethereum. So how do they actually get everyone to move over? That's their biggest challenge now.
Do they need to get everyone to move over, or can you just do atomic swaps, or can you do something to simulate it to sort of piggyback? Is there a way to have your own blockchain that piggyback on the liquidity of Ethereum?
You can potentially. It increases the costs, but I mean, the main thing is like convincing developers to actually do that and offer that as an experience. And there's not always a lot of reason to do that when it's easier to do it on Ethereum.
Fair enough. And then Pavel, I know you got a stellar background that you've taken it and run with it and broadened. What's your feeling about the right underlying blockchain for DeFi, or is the question moot, or what would you add to this?
I think in the future, it should be irrelevant. I believe in this point of view that every company will run its own asset management thing that supports smart contracts, that supports multi-signature and so on. And you will be able to run a smart contract between two systems, two independent systems, like two blockchains. And then it will spread out. So there won't be a question which blockchain is the best or whatever. So I treat Ethereum at this moment of time as the public depository of all assets. But technically, you can have many depositories. If you keep track of all assets, then it will be the same. Or you can treat Ethereum as the huge public exchange. Very slow, but like an exchange, a centralized one where you deposit something, so you buy Ether, and you buy assets on Ether, and then you withdraw, like exchanging to some other assets. So it also makes sense. And obviously, there should be many exchanges, and the liquidity should be kind of distributed between them. So I think it is possible to build a different infrastructure solving the same problem. But again, it's not an easy task. So right now, it is simpler to do everything on Ethereum, just because it's for the developer, it's always simpler to keep all the data in one database. It's but then when the amount of information grows, you need to have multiple tables and multiple databases. It is more reliable than one. But again, it's simpler to start from this single one.
And
I think Pavel's right.
Okay.
I think Pavel's right. He's basically explaining sidechain layer 2 type architecture. And I think that's how things will turn out. Where basically Ethereum is like the big very secure, very trustless settlement layer, but it's very expensive to perform operations on. And it's kind of, in a sense, you can think of Ethereum, the way I think it will turn out, as kind of the court system. Like you do most business on your own databases on the side, but if you have a dispute, then you go and pay for legal fees and you go to the judge and you know, they have a ruling and all that. That's more expensive, right? So you don't want to do it that often. So I think that Ethereum will end up kind of being that like court system, and most transactions happen on a side chain or a layer 2 chain.
Interesting. And maybe the cost, expense, and latency of it is sort of like an anti-DDoS thing, not even intentionally, but just it's a barrier towards spamming. I mean, if every spam cost a penny, you wouldn't spam. And
that's right.
Maybe it's sort of, members only nature controls it a bit. So is the adoption of DeFi driving the value of ETH at all? The actual crypto?
Sure.
Yeah.
You have to enter. You have to buy a ticket.
Yeah, you got to pay gas fees.
Fair enough. Interesting. Now, Tom, you mentioned maybe I'll mispronounce it. Aave, I guess.
Aave.
One of the products. So when I was prepping for this, I Googled, because that's the best research is by Googling, who are the main DeFi companies, and the numbers, like the names that came up, I'm not saying this is right, are Aave, Kyber, Loopring, MakerDAO, and the Melon Protocol. I don't know if that's true or not, but what I think I noticed about all of them is they all seem to have their own token. Like I guess Aave has Lend. So does go ahead.
Actually, a lot of them don't have tokens.
Is that true? A lot of them.
A lot of them don't have tokens, and they actually get less exposure because of that. So
less public exposure or less security exposure?
Public exposure.
They're okay. Go ahead.
So if you're looking, a lot of lists are based on tokens. So if you're looking for like top DeFi projects, most websites are incentivized to show you tokens. So they'll show you the DeFi projects that have tokens. So I'm dropping a couple links in the chat to kind of, help people explore different projects. But arguably the biggest projects in DeFi are, Compound now with their new token, MakerDAO, of course, they've been the OG DeFi project. And what's another big one? We have Synthetics is like a recent riser that's really been up and coming over the last year.
You've mentioned them a few times. What does Synthetics do?
Synthetics is, so are you familiar with like synthetic assets?
Sure.
So it's pegged to the price of something, but you don't.
Well, hold on. I'm familiar, but hopefully this video will get viewed by 1 million people all over the world. So explain to us like we're 5 synthetic.
Right. So you have a thing, right? Like gold, and you trade gold on a stock market. You're actually like trading the gold, right? You have ownership of the gold. So synthetic is basically trading that price of the gold without actually needing to own gold. So you actually, the contract doesn't actually represent the gold. It just represents the right to trade that price. And so Synthetics is a DEX that creates these, they're called synths, or a synthetic asset, where you can trade on the price of pretty much anything without ever needing to own the underlying. It allows you to essentially, you can trade the price of stocks if you want, US stocks, because you're not actually trading the US stock, you're just trading the price of it.
So is it fair to say that a synthetic is a derivative, but one that specifically ties to some asset that actually exists without being that asset, or
That's
it
right.
replicates
So
the financial functions of that asset without actually having the underlying?
That's right. So instead of having the underlying, you have some sort of unrelated collateral. So it could be a US dollar that's your collateral. So you're trading, and then you basically cash settle whenever you're exiting that trade based on the underlying collateral.
Now,
so
is there a danger that the synth will get out of sync? It seems like there's unlimited potential risk on at least one way that the market would move, that your collateral would not be sufficient to cover your synth obligations.
That's right. And so that's why there's a whole collateralization system to ensure that if the collateral is not sufficient, that the position gets closed out and liquidated. And the person who's gone and created this synth basically loses all their collateral before the value of it goes too low to back the asset.
So it's kind of like a future.
It's kind of like a future.
Or a future is a synth, maybe. It's one kind of synth. Like the
no,
general category.
Not necessarily, because futures can be physically settled.
Okay, fair enough.
Yep. So think of it more as cash settled futures. It's like closer to that, but not necessarily that.
Well, let me put it this way: it has the characteristic of futures that at least in one way of the market moving, you have unlimited potential losses, and therefore you have to force a liquidation prior to crossing that barrier, or else you're going to have an unsatisfied obligation.
That's right.
Is that fair to say? But unlike a future,
yes, that's very right.
You're not really literally taking future delivery of a thing. You're just simulating the financial and economic properties of that thing.
That's right.
Oh, okay, so this is right. This sounds like a great case for distributed finance, because you're going to have algorithmic splitting of risk. You're going to have contractual computational simulation of an asset. You're going to have algorithmic unwinding of positions to protect the various parties. And
that's right.
Maybe you don't have that trusted central party managing those relationships. It's merely the network making it all happen. Is that accurate?
That's very accurate. Yes.
That's great. Yep. Okay.
Yeah.
So that sounds like a fantastic project.
If you're familiar with MakerDAO, MakerDAO, you collateralize ETH and you mint a DAI token, which is worth a US dollar, right?
Mm-hmm.
So technically, that's a synthetic US dollar, because nobody is actually taking possession of US dollars in that process. Mm-hmm. You're actually collateralizing the ETH to print more US dollar. Mm-hmm. So that is a very basic and straightforward synthetic.
So I think I get it, but contrast that with Tether.
So Tether
where does MakerDAO slot in that Tether doesn't?
Can I comment? Tether,
go for it.
Like MakerDAO.
Assuming in real life that Tether actually had a dollar behind each Tether, just pretend.
Yeah.
Go ahead.
Then my joke will not be relevant.
Let's look at reality. Go ahead.
No, I like the joke better.
Yeah.
So MakerDAO has something in collateral. It may not be relevant tomorrow because it also can go down to zero, but it's visible. Tether has no visible thing in collateral. You never know. Any audit that you initiate on Tether will end up stating that they had a collateral at a certain moment of time, but you never know whether it's still there. So you cannot audit that yourself. That's the only difference. So imagine if the collateral of Tether would be a stable, the central bank currency, then it will be like superior. It would be something that it has like KYC and IML embedded into it, frozen, in order to issue some derivative that has no KYC, no IML, and moves freely. Like.
Gotcha. Okay, so let me. Tom, go ahead, please.
Oh yeah, I just wanted to get back to your point that that this synthetics is perfect for DeFi. So with Maker, you have ETH as collateral. What happened on Black Thursday when all of the markets in the world were crashing all at once was actually the entire system went into deficit. So there was a $4 million deficit in the MakerDAO system because the ETH for collateral was sold at a price that was lower than what the debt was owed. And so what happened was that's the purpose of the Maker token itself. So the Maker token, they held an auction to sell more Maker to cover that deficit. That's the responsibility and the purpose of that token in the first place.
And did it work?
Oh yeah, it worked. Yeah, there's no deficit anymore. Yeah, now it's accruing the fees again, and it's profitable again. Yeah,
that's interesting. I mean, you kind of want it to be stress test and to survive and to come back out.
Yeah.
Now.
Yeah.
So in order for the DeFi vision, you're both talking about it's getting there, or this is the vision, or this will come to pass. what are the essential components of a DeFi marketplace or ecosystem? What are the silos or the objects that need to be built so that this becomes fully real and not just an experiment? Like if you had to name them. Pavel.
I can comment. I mean, the best explanation, I mean, theoretical at least, that I saw was in the Basecoin paper, where they kind of replicated the Fed model with the currency token, with the the secure stock share token, and with the debt, like bond token. And basically the whole thing balanced each other via issuing debt when you need to take money out of the market, or issue shares and issuing more coins when you need to start inflation. So that was, at least, I think you need some counterbalancing mechanisms. So in the simplest case, you need just a collateral, and that's it. So collateral and issue the stable asset, algorithmic stable asset. But as soon as you have the balances, you can make much more efficient systems, because now the collateral has to be like 50% to 70%, so you lose a lot of efficiency.
Interesting. So the leverage is low because the system is incomplete, it sounds like?
It's just like you can walk on one leg, it's fine, but that one's super easy. So like as soon as you have it, just the model becomes much more complicated. And again, people use simple things because they're simple to understand. As soon as they need to know the mathematics behind the economy behind it, they kind of get confused.
Got it. And then Tom, in terms of, I guess the word I was looking for was actually primitives. In terms of DeFi primitives, if you like, what else needs to be created? What doesn't exist at all right now that needs to be there, and what needs to be improved?
I don't think there's any like major primitives that are missing. There's, like for instance, options right now. There's not like a big options DeFi protocol, but there's 6 good contenders for that. So like the primitives, I think, are for the most part there. I think what is missing right now is just time, because any financial analyst manages risk in time, and so how long since there's been a hack is kind of the way that you calculate how risky something is, right?
In crypto, yeah.
In financial markets, like how long since there's been a black swan? Okay, this asset is that volatile.
I see what you're saying.
Yeah. So time and proving it out is I think the biggest factor for getting it out there. And then within that time comes a bunch of things like figuring out how different protocols work together. We have like all these different lending money market protocols. We don't know yet, which one is actually the best. What's the, technical differences that makes one better than the other? We don't know. For instance, we have Aave, which has this flash loan feature. Compound does not have a flash loan feature. Does that matter? Does that mean that Aave is going to win, or are they complementary? Like, we don't know how that all plays out yet. We don't know how the composability plays out yet. So it's kind of, there's a lot of work left to do. There's a very Y Combinator of experiments that need to be run on the space to figure out how everything plays with each other and which primitives are the most important. So that's kind of.
I just got a weird analogy in my mind, which is martial arts was the same for 1,000 years, and then MMA started, UFC, and then all the traditional practitioners got in there, and Rickson Gracie, I think, beat them all. This little small guy using Brazilian Jiu-Jitsu, and then 5 rounds later, he got beat because all his opponents learned Jiu-Jitsu. And there's been more progress with martial arts in the past 20 years than there have been in the last 1,000, because you now have this petri dish where these algorithms, it's almost like a genetic algorithm. Because before, the nature of finance and lending was up in the cathedral, now it's down in the bazaar. So to take an open source reference, so in a way, DeFi can drive financial innovation because we're getting much bigger data sets, and we're getting much more real-time results and much more feedback loops that are visible to everyone. So maybe maybe the art, maybe
and,
finance
and
itself as an art will evolve.
Oh, absolutely, yeah. I mean, this is enabling things that just weren't possible before. So yeah,
and you're seeing new things. It's not just
It's not
just you had it in your mind that can do it. You're seeing it play out and going, oh, look at that. That's different.
A flash loan is a thing that never existed before, and that exists because of DeFi. And it's literally enabling new financial primitives. And so it's not just looking at the traditional financial markets and going like, okay, let's just like, copy and paste the contracts over here. The way in which everything is structured, there's completely new assumptions and constraints to think of, or lack of constraints. So it's actually, we need to rethink it. Like, how do futures work? There's an interesting point, like the stock markets right now, if you want to trade options, options are traded, each contract is 100 shares, right? So if you want to trade options, you need to be able to trade 100 shares worth of options. And the reason for that is because the options market used to run on pieces of paper and not on electronic systems. And it was too much work for the brokers to actually like individually do every share. So they're like, oh, let's just like do 100 shares at a time because fuck it, why not? And that became the lowest denominator, like the lowest minimum size for an options contract for all options markets. And that's just because computers didn't exist. So now we don't have the constraints of, not having a digital system or not having a decentralized system. So it opens things up and allows for new discoveries.
Interesting. Now let me go to another issue. The DeFi, I guess, like everything else in crypto, seems to be having some teething issues when it comes to security, contract audits, contracts working. Just quick Google, I guess June 18th, the Bancor network version 0.6. I guess they're trying to say it's still in beta. It's okay. There's a vulnerability reported that caused everyone to, I guess, have a panic attack. And then June 29th, so 2 days ago, 500,000 was drained from the Bouncer pool, which I guess is a DeFi liquidity provider. So what? I guess my open-ended question is, what the hell?
Yeah, so I think the rate of hacks in DeFi is like many magnitudes of orders less than the rate of hacks in the traditional financial system. The difference being that, like,
that's a bold statement.
I mean, people get their credit card numbers stolen all the time. There's multiple millions and billions of dollars stolen just from the credit card theft alone. The difference is that, like, that's insured, so the end user generally doesn't get their own funds stolen, like the banks cover it or other systems cover it. So I think that DeFi, if you just look at the rate of hacks, is much lower. Then
isn't that kind of because it's smaller?
Potentially,
the sample so much smaller?
That's potential, but I think that the developers put more care and thought into it because there is no FDIC insurance that cover these things. So, like, it's very important to get this right. It is decentralized.
And is there a DeFi solution to insuring DeFi?
There is, yeah. So that's options. Options is basically the answer to that. And then there's one called Nexus, which provides something called cover. But if we look at, for instance, the balancer issue, that was not, I would not call that a hack. That was a project got their token into the balancer pool. Since it's an open system, anybody can put their token into a balancer pool. Despite the fact that the balancer pool the balancer team had disclosed that non-standard ERC20s would not work correctly. And so this team had modified the way that their ERC20 works, where they charge a transaction fee in the token. They basically burn the token every time you transact. And the balancer pool is not made to handle that because that breaks the ERC20 protocol.
So someone broke the rules and the guidelines, and then they complained that it didn't work.
Right. And exactly, that's what happened. And then somebody exploited it. It's not even a hack. It's like they used the balancer pool as it was intended to work to drain the pool, because the token, which it was working as it was intended to work, but it was not intended to work with balancer. So
I guess code is law, at least there.
Absolutely, yeah. I mean, that's like, yeah, things were working as intended, and like somebody did something that they were not supposed to do. Like it was not intended to do.
Okay, now which brings us full circle to DAO, the first DAO,
yes,
the one that had the DAO hack, where someone actually used the program as it was as it was written, so code wasn't law. And now we have ETH Classic and ETH, regular.
That's right.
Let's kind of close the circle on this discussion with, for both of you, what is the intersection between, I hear it alternately, and just for the audience, it's either distributed or decentralized. I think it's distributed autonomous organization or decentralized. You can correct me if I'm wrong. Yeah. I hear it go back and forth, but okay, I'll take your decentralized. There's autonomous organizations, there's DACs, distributed autonomous companies or corporations. There's DEXs, distributed exchanges, but just plain vanilla DAO, if there is such a thing. What is the conceptual interface between DAOs and DeFi?
So DAOs tend to be the
I like that. I want a death match. You guys, okay, Tom, go first. What's your
okay? Yeah, so DAOs tend to be the governance layer. So for instance, you have Compound, which is a lending market, and one of the important functions that needs to be maintained in Compound is the collateralization ratio. So you have to keep track of all the assets that are listed and how volatile they are. If it becomes more volatile, you need to increase the collateralization ratio, right? If it becomes super stable, then you can actually decrease it to allow for more leverage in that market. So the Compound token, the purpose of it is the governance of A, adding and removing assets, and then B, also determining what the collateralization ratio of those assets are. So it's literally, you have all maybe thousands, hundreds of thousands, millions of different users that possess DAO tokens, and more people are possessing it every day, that vote on these different issues, the governance of the protocol itself. So that's kind of where
families waking up. So
that's pretty much I think the main way that DAOs play into this. Then there's another interesting project, the Venture DAO, which is one that I'm a part of. So this was pioneering the merging of DAO code and legal code or legal contracts. So we call it the legal wrapper or the legal condom. So basically, the lawyer on that project, yes, the lawyer on that project has taken he's studied exactly how the code works, and he's written the actual code in the legal contract. So, for instance, all of the members vote via this function in the contract and the code, and the result of the function is the vote of all the members of the LLC. So there's an actual LLC that in the operating agreement says that like this DAO is how we're making decisions. Like that's our operating agreement.
There's a fascinating parallel between that and the DevDAO project that we were discussing last week, because we were going to go with a Wyoming LLC, but we ended up, because of the unique nature of Swiss law, going with a Swiss association like FIFA, the soccer organization. Nice. They're a Swiss association because there's specific things you can do under association law in Switzerland that you can't do elsewhere. Yeah. And we had this discussion last night. Like, is a legal entity sort of a shield? Is it a wrapper? Is it tethered somehow to this distributed entity? Or is it like a vestigial limb that's going to sort of disappear as the DAO concept evolves? And we're all kind of wrestling with the same issues during this transition period. And it's actually a fascinating time to be a lawyer. Pavel, you were going to say something about the DAO DeFi interface.
Yeah, if you treat DAO as a project, then DAO is a subset of DeFi. That's it.
It's a subset or it's a component?
Subset. Oh, it's a subset.
That's a good point.
Particular...
Both of you talking, we'll just figure it out. Go.
Okay.
So you're referring to the original DAO, like the first DAO, the infamous one.
Yeah.
So
I guess in general, do both, as they were and as they are.
So the Venture DAO is the spiritual successor of that. The original DAO was actually meant to be like a venture fund DAO, where everybody contributed capital and then they decided on investments. So the Venture DAO is very much a successor of that. In fact, we have most of the original team that worked on that original DAO project are members of the Venture DAO. So in that sense, we're at scale managing a common pooled resources, right? We have our capital that we invest. We put some of it into stablecoins, some of it into ETH, and then we make investments in different projects. And so we have the tokens that represent all of those projects in there. So it's a community management of financial resources. So in that sense, that's kind of in a very different way from like the governance token of Compound, which is kind of like managing the overall protocol. This is a tool. It is DeFi because it's financial management for a group of people, right? So it's kind of, I get what you're saying there.
Interesting. Now guys, we're on the way to wrapping this up. I want to actually give Luke. Luke is the gentleman who is hiding behind the Icoinic logo, and Icoinic, of course, is we like to say powered by Icoinic because it's so powerful. Luke, prior to the show, expressed an interest in DeFi. Luke, first of all, just show your smiling face. If you can, show your Bitcoin background. There you go. Now show the poster behind you. Guys. Move your head so we can see the poster. Yeah, Bitcoin. I want to thank Luke for moderating, for running interference on various, Zoom bombing attempts as always. And Luke, just because we're kind of running down the clock, just real succinct statement of who you are, what are you doing at Icoinic, and just if you want to throw anything into the mixer on DeFi, I'm giving you your come out from behind the curtain moment.
Yes, a minute of fame.
Yes, and applause to you.
Well, thank you guys for having me on the webinar as well. As said earlier, my name is Luke. I'm currently working as an office manager at Icoinic. That means that I'm responsible for also hosting or moderating the webinar, but also some internal administration, the website, some marketing, stuff like that. And I actually got into the space because I'm a real fan of the blockchain technology itself, not necessarily the trading aspect, and of course the DeFi space. I went to different conferences about DeFi and spent a lot of time in the communities, speaking to a lot of people, learning about this new vibrant space. And I've actually been using some projects that you guys have mentioned in this webinar. Just this morning, I was trying out the synthetics options. It's pretty new. And I was just testing it out with a small amount of money just to see how is the flow, how does it work, how does the UI explain itself? Because that's what I think is going to be the biggest, a big hurdle is to onboard new users to the platform, get to know how they should use their asset, even just the basic principle of a private key and how to store it. I think that's going to be hurdles to mass adoption of DeFi or blockchain tech in general. As discussed in the chat as well, there are some security concerns, but you guys also mentioned those already. But yeah, that's kind of my DeFi story, how I got into this.
I think Gordon is muted now. So
no. Every time I mute myself and then try to unmute, it says the host has muted you. I'm not quite sure why. So Luke, it's nice fortuitous opportunity that you're personally involved in this and find it interesting in it. And I could feel you invisibly nodding as our guests were speaking. So we're up on the end of the show. Sander, I'm gonna pass it back to you. Maybe you know what to do. You got it.
Yeah. Thanks for that. And first of all, let us all thank Luke, because every week he helps us out with the moderating stuff and handling all the questions that come into the chat box and uploading on the YouTube channel. So Luke, thanks for all the help so far and for upcoming shows to come. And for everybody that wants to also have a look at the previous show, because we mentioned a couple of things we had last week. A really good show with Tim, with Dr. Wolf, Professor Wolf, and with Bernd Lab. He is from, I think he's now in Crypto Valley Zug, based.
He's in Zug.
Yeah, he was the one also talking about the Swiss association. Really fascinating. So for everybody that's listening now or watching the recording, also have a look at the previous shows, because I think they contain some valuable content. And this is one of the purposes also that we share the content out in the world. So we would like to happily invite you all to come back next week, same time, same Wednesday, same Zoom link to log in, and please forward it to your blockchain and crypto friends to also join, so we can share with more and more people. That's one of our goals. Besides
Sander, who's our guest next week? I think it's your friend this time.
Yeah. It's one of the. Yeah, I'm gonna build it up, Gordon. This is
okay. I'm sorry. I stole your. Didn't mean to steal your fire. I'll shut up.
I'll start with the teaser first. Now, this guy, he's a youngster, and he's like famous not only in Amsterdam where we are. He's located in the same spot as we are in the stock exchange. He's not only famous in the Netherlands, he's throughout Europe. His name is like a buzz. It goes around and around and around and around. And he's got a big following. And I call it his crypto name is called Crypto Michael. So most of us have heard of him or are following on Twitter. I think he's got over 100,000 followers. And this guy knows his stuff. So I would like to invite our audience, but also our previous and today's speakers, Tom, Pavel, all right, also next week join us, because this is really interesting. This guy is on top of his game, like I said, and he's eager to share his insights and what he sees in the market with us. So we are very happy and also grateful for him to join us next week. So we look forward to seeing him next week. But besides that, Tom and Pavel, we would like to, on behalf of Gordon, Luke and myself, we would like to thank you for today's participation in the show. I think it was a really good show. Gordon, thanks for the preparation and getting things done. I really appreciate it. Also, because looking at the time, it's really early for you, but this is how our markets work. We get up when everybody goes to sleep and vice versa. So I would like to thank the guest. I would like to thank everybody that was attending in the live show, and also the ones who are watching the recording. Thanks for that. We look forward to seeing you next week. Today's show will also be uploaded on the Icoinic YouTube channel, and us as speakers and guest speakers will also distribute it on our social channels. So I'd like to thank everybody again. Have a good day.
Thank you.
Good morning, good afternoon, and good evening, and hope to see you next week. On behalf of Gordon and myself, we look forward to that. So see you all
Bye,
next
everyone.
Guys.
Thank
Bye,
you.
everybody.
Thanks.
Thank you.
Bye.
Bye.
Yeah.
Bye.
Thanks.